being here tonight. We'll call this workshop to order, and with that, I'll turn it over to our city manager.
Thank you, Mayor. Here we might need megaphones or something. We needed this opportunity to have the auditors come and review the audit for the fiscal year ending 2022. And with that, Robert, I'll go ahead and turn it right over to you guys.
Okay, this is the second year that we've had Crossland CPAs based out of Nashville as our CPAs, and this is the second year of our 3-year contract. As Cindy said, this is for the year ending June 30, 2022. I will say that we had a great year. They'll go through that, and we've kept good records, so everything in here is fairly stated. But Erica Sager is the partner on the audit, and then Curtis Payne was also in charge on the audit as well. They had 2 or 3 other staff that helped them do a great job. But Erica's going to start going through this required communications like we did with we've done in the past, and so then she'll pass it off to Curtis at the appropriate time. And if you have any questions, you can stop them in the middle, and they'll answer them for you.
Yes, feel free to stop us anytime. As Robert said, my name is Erica Sager. I served as the first principal on the engagement. We're going to go through this booklet first. Professional standards require that we communicate our results of the audit to you as part of our audit process. On the first page is a letter from us to you, thanking you first for the opportunity to serve as your independent auditors and your business advisors. And it also states that a direct line of communication between our firm and you is a very important part of our responsibilities. And finally, we want to take this opportunity to express our appreciation to Cindy and to Robert, Steve, and the rest of the team. They were ready for us when we arrived, which always makes it a more efficient and effective audit process. They're very timely in their responses to us. So the audit went, from our perspective, went very smooth this year. Since it was the second year, the first year you have a lot of learning curve and a lot of building, and this year we were able to dig in a little bit deeper. But we appreciate their help and assistance through the audit. At the top of page 2, our report on the results of the June 30, 2022 audit. We did issue an unmodified opinion, which is a clean opinion or the best opinion you can receive. We also want to point out that the state of Tennessee does have oversight responsibility for the audit process. We did initiate a contract with the state through their CARS system, and we will meet the extended reporting deadlines for both federal and state governments for the fiscal year 22 audit. Each year we do want to note that we are independent with respect to the city. And at the bottom of page 2, we've included for you the engagement personnel. And we want to point out that the team was 100% the same as in the prior year, which is typically pretty rare with an accounting firm. So usually there's turnover in public accounting, but 100% of our team returned, which also helped for a smooth audit process as well. At the top of page 3, our responsibilities under generally accepted auditing standards, government auditing standards, and uniform guidance. Our professional standards say that we are to plan and perform our audit to obtain reasonable rather than absolute assurance about whether the financial statements are free of material misstatement and that they're fairly presented in accordance with generally accepted accounting principles. Bottom of page 3, management judgments and accounting estimates. Some of the most significant estimates that affect the city's financial statements include property taxes receivable and the related deferred inflows of resources, allowance for doubtful receivables, useful lives and valuations of capital assets, and the assumptions used to calculate the net pension and other post-employment benefit obligations. We did look at the key factors and assumptions used in determining those estimates and did determine that they are reasonable in relation to the financials taken as a whole. At the top of page 4, significant accounting policies of the city are included in note 1 to the financial statements. Audit adjustments, there were a few minor adjustments that were proposed as part of our audit process, and those were recorded by the city. We had no alternative accounting treatments. Top of page 5, management consultations with other independent accountants. In some cases, there might be an accounting or auditing issue in which the city wishes to speak with a different accountant or auditor. However, most of the time that's rare, but if that happens, professional standards require that they communicate with us to make sure that they have all the relevant facts. And to our knowledge, there were no such consultations. We had no disagreements with management. Other than signing the engagement letter, there were no issues discussed prior to our retention as independent auditors. We had no difficulties encountered in performing the audit. And bottom of page 5, we did not identify any material, fraudulent, or illegal acts during the course of the audit, nor were any disclosed to us by management or the City Commission. Top of page 6, we did look at the city's other information in relation to the financial statements and noted no material inconsistencies. We're not aware of any documents that will contain the audited financial statements of the city. In the middle of page 6, we do detail for you some of the areas of audit emphasis, and these are areas that we spent the majority of our time during the audit, and those are similar to the prior year. The bottom of page 6, this city did exceed the $750,000 threshold for federal expenditures, so we did perform a single audit for 22, and the major program that was tested was the disaster grants, the public assistance grants. And during that testing, there were no findings noted. Pages 7 through 9 are recent accounting pronouncements, and as Robert and the team know, the GASB are issuing standards at a very rapid pace, just coming out left and right. So these are some of the standards that are upcoming over the next few fiscal years. As they become applicable, we will work with Robert and his team to implement these standards into the city's financial statements. And then included on pages 10 through 17, this is a draft of our management representation letter. And it will be signed by management after today. They're gonna, once the audit has been approved, the management representation letter basically states that everything that we asked for during the audit was given to us, it was complete and accurate, and again, management will sign that before we issue final. Typically, if there are any findings or internal control matters, those are communicated through a management letter, but we had no findings, so there is not a management letter for fiscal year 22. Are there any questions on the required communications? Yes. Okay, well then I'll turn it over to Curtis and he will go through some financial statement highlights.
All right, so if y'all want to turn to the first page after the where it says the financial section, it's about maybe 6 or 7 pages in after the board
What
officials.
page did he say, Robert?
Page 1 and 2 at the bottom.
About 7 or 8 pages.
7 or 8 pages
inside.
in, yeah.
Looks like this got draft on one side and then page.
Got it?
Independent auditors report.
Yeah, independent auditor's report.
So it looks like this right here.
Yeah, independent auditor's report.
Yes.
So this is the independent auditor's report. This is actually the only item in the financials that's truly ours. The rest of it is the responsibility of management's. But as Erica mentioned, this is an unmodified opinion, which states that we believe, in our opinion, the financial statements referred to are fairly presented in all material respects. So I'll keep the rest of this pretty high level. I know we're about 6 months past year end, so we are looking at historical numbers here. I'll look at some of the changes year over year and maybe a couple of the highlights of the bigger numbers. So I'll kind of start with the MD&A, this is management's discussion and analysis. They put this together for us, basically just talking about some highlights. And you know, if you really don't want to read 100 pages, then that's what I would stick to, since it's a very good overview.
And that begins on page 5.
Me personally, I leave this on my nightstand, and this is kind of what I like to read at night before I go to bed.
Loves to go to sleep.
I'm just kidding.
Had not been.
So on page 5, where it says overview of the financial statements, this is kind of the overview of the government-wide financial statements. Government-wide, you don't operate your city kind of on government-wide, you kind of operate on a fund basis. But government-wide includes your fixed assets, your long-term liabilities, all those things that are on a full accrual basis. The fund statements exclude those things, so your fixed assets are more like capital expenditures, and it's more done on a modified accrual basis. If you turn to page 8, we'll start here. So the primary government, which includes all your governmental activity funds, and then plus your business type activity funds, which is water and wastewater, the total change in the net position was about 32.5 million. So obviously an increase of 32.5. So obviously you all had a very good year this year. On the next page are some of the elements of this increase of 32 million. So your charges for services increased about 4.5 million, which is primarily related to the 20% increase in water and sewer rates for 22. Taxes and other than property taxes, which basically is your sales, gross receipts, and hotel, motel, and amusement tax, increased about $5 million, which is about 9% during the year, which is another very good year for those. Overall expenses for the government increased about 6.2 million. Now this is kind of expected since you're coming out of this COVID year and your expenses are starting to increase as the optimism comes back with the tourism industry. So that did increase by 6.2 million. And then there was a transfer of 4.5 million from the general fund to wastewater. On the next page, this is a revenue by source. This is a kind of a good overview on your governmental activity revenues. As we all know, the majority of your revenue comes from gross receipts and add-on taxes. So you can see there your sales tax, your gross receipts tax, and those type of taxes, approximately about 72% of your total revenues. The last two fiscal years have shown a pretty good rebound from 2020 after that COVID year, and it's amazing that you continue to see that growth, that jump after that 2021 year. So you saw another increase of about 9% of your gross receipts tax collections this year, which is great. On page 11, your business type activities. The business type activities are just the wastewater and water funds. The increase in the net position there was about $6.2 million. And then operating revenue increased about 2.1 million or 32%, which again was due to the 20% increase in water and sewer rates. On page 13, just quickly, this is a quick summary of the component unit, which is Rocky Top. You had an increase this year of $635,000, and last year you had a decrease of $917,000. That's due to just an increase in the local contributions from the city county, which those contributions are capital related for capital projects. About halfway down the page where it says financial analysts of governmental funds, so these are the actual funds that you kind of base your city operations on, which excludes the capital assets. They're now included as a capital expenditure rather than capitalized as a fixed asset. On the next page, talking about the general fund. So the general fund decreased $7.2 million during the current fiscal year compared to an increase of $13.9 million last year. So if you look at the general fund before the transfers, you all had similar results. However, the transfer of $16 million to the Public Works Construction Fund for numerous capital projects, which I think a lot of that's the convention center, I believe. Convention center. And then the previous mentioned $4.5 million transfer to the wastewater fund. Those two things kind of offset that difference. So it's pretty similar before transfers. A few paragraphs down talking about the Public Works, actually, it increased by $13.5 million, which again, that was mostly due to the transfer in from the general fund, which mostly due to capital projects. Moving on to page 16, talking about your long-term debt. Total debt increased a net of $17.6 million. This is two things: $20 million new debt issuance, along with I guess about $2.5 million of pay down of the debt. So all in all, you had at the end the city had total bond debt outstanding of about $60 million.
Fund balances. We've got a significant amount of money in fund balances. Are they kept in local banks, and are they guaranteed?
Yes, the banks have to, by law, to collateralize all of our deposits, which right now we have an agreement with Smart Bank where we keep our funds there. We are looking at Sometimes we do invest in other government securities, which we're looking at maybe doing that. The rates have been, they just been doing this right now the last little while, so you'll see, one of the things that's really.
What is it, about 2 point something now?
No, it's up to 4, it's up to 4 something now, the latest thing we looked at. We get the 90, what's called a 90-day T-bill rate, and so for a long time we had a guaranteed minimum, which our guaranteed minimum was way above what the market was actually paying for a long time, but now the actual market interest rate is far above the minimum rate, about 6%, we're earning somewhere around 4% now, it's the last time. Yeah, but it's all insured by smart.
So that was a brief overview of the MD&A. I do want to touch on a couple things of the actual statements, unless you want to touch on the changes, like what happens to the statements.
Sure, I can do that. One of the things that we do each year, the state has a desk review of the audit each year. And when we took over as the auditors, one of the items that they had asked for were a change in the financial statements. So previously, the way that the city was reporting some of the funds in the back, in the schedules in the back, you had all your special revenue funds, regardless of whether they were major or non-major funds. And then you reported your debt service funds together, and then your capital project funds together. Well, the way that it's required to be reported is all non-major funds, regardless of what type of fund it is, has to be in one combining schedule so that that total ties up to the face of the financial statements. So this year you will see that change. We made that change so that all of the non-major funds are now on page 75. Those are combined, and that total agrees up to the face of the financials on page 21. The other change is depending on your total assets or total revenues, if it exceeds 10% of your fund balances and 5% of your overall governmental balances, it's required to be reported as a major fund. And so the parking and mass transit fund, because of the significant increases in your parking revenues this year, caused that to become a major fund. So that's now reported on page 21 versus page 75. So
Just a reporting
yeah,
thing.
So,
it's not really affecting the audit much.
So with that change, it takes care of any comments that the state previously had on the financials themselves. And of course, if you have any questions about it as you look through it, feel free to reach out to us via phone call or email. We're happy to walk you through anything you need to know.
That's all I have. Unless you all have specific questions about the numbers.
Our debt and our liabilities, our interest rate on our loans right now are a lot less than what we're earning. We're earning a lot more in interest on our checking accounts right now, and our operating accounts, and we are paying out in interest. So in a profitability margin, we're looking pretty good on that side.
Any questions, comments? All right, thank you.
Thank you.
Good job.
And that's it for the workshop.